Good morning. You're watching All You Need to Know on Bloomberg Quint Live. I am Jayesh Khilnani and I have Agam Vakil with me on the show to take you through the F&O space. But let's have a look at what you can expect this Friday morning in terms of trade. If you have a look at the handover from the US market, though if you see red on the screen, but I would say that the handover was positive, given that the Dow Jones in fact recovered more than 400 points from the day's low and ended positive. As far as the European indices are concerned, we had a sea of red over there as well. And the Asian markets, while once again the Japanese market is closed on account of a holiday, the Hang Seng is trading absolutely flat, just about 0.1% in the red. As far as indications for the Indian markets are concerned, the SGX Nifty is indicating a mild negative start to the tune of about 40 points lower, and a start which will be lower than 10,700 for the Nifty itself. In terms of the ADR cues that we got, we had most of them closed negative, led by Tata Motors, which was down about 1.5%, 1.4%, and we had Wipro, Infosys and Dr. Reddy's, which also closed lower. As far as the gainers are concerned, we had Vedanta and HDFC Bank, while we had ICICI Bank, which closed flat. In terms of the commodity cues that we are picking up this morning, oil prices are trading absolutely flat on the back of a 0.8% surge overnight. Now, if you look at the metal space, more cues are coming in from there. The base metal index on London Metal Exchange closed lower, led by aluminium and nickel and zinc, which closed lower in trade, while copper and tin managed to surge. Now, if you look at the Shanghai Futures Exchange, the base metals are trading on a mixed note, where the Shanghai zinc prices are trading lower by about 1.7%. As far as gold prices are concerned, once again flat trade over there as well. Remember that gold has been subdued this week on account of a surge in the dollar index. Now, if you look at the fund flows that we got in terms of the FIs and DIs, both of them have been net sellers for yesterday and in fact for the month itself, but still early days in the month, so we'll have to wait and watch how this actually pans out in trade. As far as the key indices are concerned, if you can have a look at that, we had the Nifty 50, which actually declined in trade, about 0.4 lost yesterday, while we had the broader markets which saw sharper cuts over there. So the mid cap index ended about 1.3% lower, while the small cap index ended about 1% lower. As far as the losers are concerned, sector losers, we had the Nifty IT index, which was the top loser in trade, that shed about 2%, largely on account of HCL Tech, and we had the Nifty Realty index, which also declined 1.7%. As far as the gainers are concerned, we had the Nifty Metal index, which surged about 0.8%, followed by the Nifty Bank, which also managed to close positive for itself. Now, if you look at the VIX index, which measures the volatility, that has inched up from sub 12 levels to nearly 13 now. That's an up move of more than 1%. As far as what led to the 40-point decline in the Nifty, we had ICICI Bank, Sun Pharma, HDFC and Axis Bank, which contributed to the gainers, while we had HCL Tech, Reliance, L&T and Kotak Mahindra Bank, which contributed to the losers. But Agam, what can we expect from the F&O space today?
Sure, Jayesh, the subdued cues coming in as far as the F&O is concerned. Starting off with the futures, no change at all when it comes to the Nifty open interest. As you can see here, even when it comes to the Nifty Bank open interest, only about a 1.5% added in terms of OI, while the underlying moves up by less than 0.1%. Moving in with respect to India, volatility index, again, just about a 1% uptick, still below the mark of 13, and no change in the Nifty put call ratio either, currently at around 1.52. But we have seen a little more writing on either side of the current range, and we've seen more writing in the 10,900 call coming down from 11,000, and on the other hand, a little more writing in the 10,400 put. But the base formation has been around the 10,500 mark. But moving in, we have two counters which have entered the F&O band, so that includes Jet Airways and Just Dial, and we're keeping an eye on some counters which lost out in yesterday's day of trade. Interglobe Aviation, along with the rest of the aviation pack, had a very bad day of trade yesterday, and losing out as much as 10%, 11% added an open interest towards shorts. And we also saw more shorts being added in HCL Technologies, which was also one of the weakest counters in the information technology sector, that also saw nearly 13% added towards open interest towards shorts. So plenty of stocks out there to watch out for, and we'll have to wait and watch whether or not there will be a little bit of recovery. But now let's go across to Bloomberg's Yuan Man to know about all the news that is being made across the world.
President Trump has changed his account of a $130,000 payment made to porn star Stormy Daniels during the 2016 election campaign. He now admits reimbursing his attorney to stop what he calls false and extortionist accusations of an affair. In a Twitter post, Trump said the money had nothing to do with the campaign, pushing back against allegations the payment may have violated election finance laws.
As Mayor Giuliani stated, and I'll refer you back to his comments, this was information that the president didn't know at the time, but eventually learned. The president has denied and continues to deny the underlying claim. And again, I've given the best information I had at the time. And I would refer you back to the comments that you yourself just mentioned a few minutes ago about the timeline from Mayor Giuliani.
North Korea has reportedly agreed in principle with the United States to end its nuclear programs by 2020. That's according to South Korea's Donga-ilbo newspaper, citing unidentified intelligence sources. It says the North has accepted International Atomic Energy Agency inspections of its nuclear facilities and is discussing verification measures with the U.S. Bloomberg sources say the two top U.S. market watchdogs have opened investigations into possible manipulation of Cboe's VIX benchmark. We're told the Securities and Exchange Commission and the Commodity Futures Trading Commission are looking at the volatility gauge. The monthly auction, which sets the price of VIX futures contracts, is one area of inquiry after wild price swings this year. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Yvonne Mann. This is Bloomberg.
Back to local equity markets. Stock of today is Thirumalai Chemicals. Well, the company has reported good set of numbers. If you look at the top line growth, we're seeing a muted revenue growth at 8% to a number of around 331 crore as compared to 307 crore that we've seen in the corresponding quarter of the previous year. We've seen a sharp surge in the net profit performance of the company. The bottom line has risen as much as 110% or more than 2.5-fold jump to a number of 40 crore as compared to nearly 9 crore that we've seen in the corresponding quarter. Healthy performance coming in on the operational front of this company. A 56% jump is what the company has registered for the March quarter at a number of 70 crore. Well, the margins have shot up to 21% as compared to nearly 15% in the March quarter of the previous year. So what has led to good set of numbers? The kind of cost optimization measures that we've seen, at least in the raw material cost front, has led to a good show, at least on the operational performance. Raw material cost as a percentage of net sales, that number has come down to 59% as compared to nearly 68% in the corresponding quarter of the previous year. Higher EBITDA along with your lower depreciation and tax has led to a good show on the bottom line front of the company. Finance costs have declined as much as 72% year-on-year basis for this company. Depreciation has slid to 35% to a number of 9.1 odd crore.
Let's get your check on the commodity space, starting off with oil prices currently trading absolutely flat, but this is on the back of an 0.8% surge that we saw overnight. And a couple of factors that are playing out in the oil markets. One is the dollar index, which has shown some bit of resurgence in the past few days. That is weighing in on the oil markets. So the other factor is the market is actually watching out or focusing on the Iran sanctions, whether or not they will be actually imposed. And we understand that Trump is likely to announce on or before May 12th, so we'll stay on top of the development and get you all the details on that front. But as far as the base metal index is concerned, we saw a downtick in the index itself, largely led by aluminium, which was down about 2.5%. That was the top loser in trade. Now Vedanta says that they see more volatility in the aluminium markets going ahead on account of the sanctions that have been imposed. As far as other base metals are concerned, nickel and zinc declined over 1% each, while we had copper and tin, which ended the day positive. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a mixed note with Shanghai Zinc. That is trading about lower by about 1.7%. As far as precious metals are concerned, we saw that gold actually traded lower for 3 days this week. However, did manage to surge overnight on account of a slip in the dollar index and the Federal Reserve leaving the rates unchanged.
that we are watching includes Trent, which reported a strong set of numbers if you look at it on an adjusted basis. So revenues for the company rose by about 18%, net profit fell 52%, but that is because they had an exceptional gain of 25 crores in the base quarter. Adjusted for that, they will look like better numbers. Operationally, EBITDA was up 82% and net interest the EBITDA margins came in at 4.8% as compared to 3.1%, so an uptick in the margins as well. That apart, we're also watching out for Nucleus Software. We set of numbers coming in from this IT company, unlike the trend that we've seen for its peer group companies. While revenues grew by 5% sequentially, the net profit fell by 6%. That is because EBIT was down about 18% and EBIT margins also fell about over 300 basis points sequentially to 12.6%. That apart, you have Tata Motors, which will be selling its defense and aerospace portfolio to Tata Advanced Systems Limited, which is a wholly owned subsidiary of Tata Sons. So two things over here. One, they are going to be selling the defense business for an upfront consideration of 100 crores and a deferred consideration of 3% of the revenue generated. That will be up to 1750 crores over a 15-year period. That's one. And secondly, they will be selling their shareholding in TAL Manufacturing Solutions, and that will be for an enterprise value of 625 crores. So watch out for Tata Motors today. J. Kumar Infra Projects is yet another one which could see some positive reaction on the back of order wins worth 445 crores. You have an ET report which says that Bharti Airtel could sell 25% stake in African unit to raise $1.5 billion. Watch out for that name. Yet another Mint report which says that Aditya Birla Capital is in talks with Alternative Assets Manager for distressed assets business tie-up. So watch out for that name. And lastly, you have Fortis Healthcare, where three funds, which is York Asian Opportunities, York Asian Strategic Metric and York Multi-Strategy Master, together have sold 5.4% stake in the company via bulk deal, whereas so they have bought this stake, and the seller is UBS Principal Capital Asia. And additionally, the board also will be meeting on 10th May to discuss all the bids that they have received. So continue to track this name as well.
In big set of earnings today, we are tracking Vedanta, which has reported good set of numbers, a beat on operational front. If you look at the Q4 EBITDA performance, it's almost up by 6% year-on-year basis for this company and almost a 16% uptake sequentially for this counter. The growth has been mainly driven by the Zinc India, oil and gas, copper and aluminium business. This to an extent has been tapered down by the kind of decline we have seen in iron ore as well as Zinc International business. The margins, however, have contracted to 28% as compared to 33% that we've seen in the corresponding quarter of the previous year. Higher commodity prices have offset the currency appreciation, and the commodity inflation to an extent have restricted the fall that we've seen in the margins. The company has reported an exceptional gain of around 2,869 crore for this quarter on account of the impairment charges or the impairment gains that you've seen for the assets. In terms of segmental breakup, strong performance coming in from aluminium business, which has registered a 32% uptick year-on-year basis and more than 100% rise on sequentially. Oil and gas also has been good in terms of the performance, both 34% rise on year-on-year basis and an 11% uptick sequentially. However, we're seeing some kind of disappointment creeping in from Zinc International business, where the EBITDA although rose 87% year-on-year basis, but then that declined 42% sequentially. Also in terms of Zinc India EBITDA business, as we all know, it's a 3% downtick year-on-year basis, and we have seen an uptick of nearly 11% sequentially. Iron ore business have seen also weigh down on the operational performance to an extent. We've seen a 50% decline year-on-year basis for this counter, along with a 16.5% uptick sequentially.
The resolution professional appointed in Lanco Infratech, Savan Godewala, has decided to go to the NCLT to file an application for liquidation of the company. This decision was arrived at after the lenders assessed a bid that was submitted by Triveni Earth Movers, but then found that that bid was not favorable to them, and then did not vote, did not give about 75% of the lenders' vote, which is necessary for a bid to go through. Of course, Lanco Infratech owes its financial creditors more than 45,000 crores according to the claims that are admitted by the resolution professional. Of course, these 45,000 crore, this 45,000 crore number includes all the guarantees that were issued by Lanco Infratech in favor of its subsidiaries. Now, according to the people who are involved in this case but spoken conditions of anonymity, Lanco Infratech's liquidation value stands at close to 1,400 crore. It is one of the 12 large cases which were sent for immediate insolvency action by the Reserve Bank of India back in June 2017. Of course, no resolution has come up at the end of the 270-day period, because of which the liquidation process is being triggered. The 270-day deadline for Lanco Infratech ends on the 4th of May, and that is when the resolution professional will go to the NCLT.
The GST Council in its meeting on May 4 is going to discuss a number of issues ranging from simplification of GST returns to imposing a new cess on sugar. According to a proposal discussed in a meeting of state and central government officials of GST, the new proposal would be something like wherein all sellers will have to upload all their invoices, and buyers will have to acknowledge all these invoices, based on which buyers will get credit. Now, if the government finds out that the seller has not paid the tax liability, the first priority of the government would be to recover the tax amount or the tax due from the seller. In case where the tax liability from the seller cannot be recovered, the buyer will be asked to reverse its credit by the tax authority, or buyer will have to pay that tax liability. Another item on the GST Council's agenda is to impose cess on sugar, and at the rate of around 5%, and this comes after the government decided to subsidize sugarcane farmers at 5.5 rupees per quintal, since a large of their areas were pending, or their dues were pending from sugar mill owners. Now, the third item, or the third important item on the GST Council's agenda, is to turn GSTN, or the Goods and Services Tax Network, into a publicly held company, meaning the state and the central government would increase their stakeholding further in GSTN by another 51%. Now, the idea behind increasing the state and the central government stake in GSTN is that the government fears that no data or the crucial data of traders should not be compromised, since it's held by private sector players like HDFC, ICICI Bank, HDFC Bank, and some other private sector players.
Well, in terms of the big earnings that we're tracking this morning is Ambuja Cement, which is expected to report a good set of numbers. Top line, we're expecting a 14% growth there at a number of around 2,891 crore as compared to nearly 2,533 crore. EBITDA is seen up as much as 20% for this counter to a number of 471 odd crore. Margins are seen at around 16.3% as compared to nearly 15.6%. Bottom line is seen higher by 21% to a number of 297 crore. In terms of other parameters, we have the volume growth, which is expected to see an uptick of 5% to 6.3 million ton as compared to 6.2 million ton that was reported in the corresponding quarter. EBITDA per ton is seen higher by 13.9% year-on-year basis for this company to a number of around 746 rupees. Also, in terms of the realization, we are expecting an uptick of nearly 9% to a number of 4,575. What goes behind the making of these estimates? Well, in terms of higher realization, much of the sales have been realized towards the West India according to the expectation. A higher realization is also expected to aid the operating performance of the company. This is despite the higher fuel cost, which is also a key metric that we like to keep an eye out. This, along with your volume growth recovery and the outlook that we have for the calendar year, given that it's the first quarter that the company is reporting, is also something that we'll have an eye out for. Also, the cement pricing outlook and sustainability is among the few factors that we like to track.
Here's how the numbers stack up in Karnataka and why the BJP's chief ministerial candidate B.S. Yediyurappa is so important to the party's fortunes. Here's how Karnataka voted in 2013. 122 seats for the Congress, 40 to the BJP, 40 to the JDS. 5 years before that, in 2008, it was the BJP under Yediyurappa that formed the government at 110 seats and the support of a few outsiders. So what happened from 2008 to 2013? By 2013, Yediyurappa was out of the BJP. The mining Reddy brothers were out of the BJP. So were their associates. What happened as a result? They cut into the BJP's vote a lot. The central Karnataka region, that's Shimoga where Yediyurappa comes from, and that's Bellary where the Reddy brothers come from. See that from 2008 to 2013, much of that got wiped out for the BJP. You had two other regions that the BJP fared worse in. That's the Bangalore region, that's Bangalore city in and around it, and the coastal Karnataka region that the BJP lost support in 2013. The Yediyurappa return to the BJP was before the Lok Sabha election of 2014, and the Reddy brothers are present in the BJP in this election as well. Two of those brothers have tickets given to them, and 6 of their associates have been as well. So that's a double-edged sword. The cloud that these leaders bring back to central Karnataka for the BJP, but at the cost of their past record being questioned by the rivals. For the Congress, this is a two-front battle. In North Karnataka and Central Karnataka, the Congress is fighting the BJP, and in South Karnataka, it's fighting the JDS. So what's Chief Minister Siddaramaiah doing? He's fighting from one seat from Mysore district, the Chamundeshwari in the south, and one seat from the north in Badami in Belgaum district. So it's a two-front battle for the Congress, remember. The halfway mark for Karnataka is 112, 113. So if either fails to reach that mark, this JDS number, watch that closely on the 15th, that could be the difference.
Well, here's the top 3 stocks that you need to keep on your radar based on the delivery, buying and selling as of yesterday. The first stock that we have on our list is Interglobe Aviation. Arguably the stock of the day yesterday ended about 10% lower and saw delivery selling of nearly 500 crores. The delivery volume, however, surged more than 150% at nearly 41 lakh shares as compared to its 5-day average, and the total volume surged more than 3 times at nearly 1.5 crore shares as compared to its 5-day average. Second stock to watch out for, that would be Siemens India, which was down about 6% after posting its results. The delivery selling that it saw was more than 60 crores, and the delivery volume surged nearly 150% at about 6 lakh shares as compared to its 5-day average, and the total volume surged more than 3 times at nearly 18.5 lakh shares as compared to its 5-day average. Last and final stock to watch out for, Cyient. Now this is the second day running that we have seen this counter come in the list for maximum buying. It was up about 2.5% in trade yesterday and saw delivery buying of more than 100 crores, while the delivery volume surged more than 120% and the total volume surged more than 75% as compared to its 5-day average.
Now, a major dust storm hit parts of Rajasthan and Uttar Pradesh yesterday, killing nearly 100 people and leaving behind a trail of destruction. Trees and electricity poles were uprooted and houses were severely damaged. Nearly 150 people were injured and rushed to hospitals. Rescue and relief teams have been pressed into service to clear debris and also to restore power supply. Prime Minister Narendra Modi has directed officials to coordinate with states to ensure speedy relief and rehabilitation of those affected. A report also emerged from the Met Department that another dust storm may hit parts of UP and Rajasthan over the next 48 hours. You'll find that and a lot more on the website. In fact, there are several stories that you can read, including this one. Markets regulator SEBI has put in place a stronger mechanism to check non-compliance of listing conditions, wherein exchanges will have the power to freeze promoter shareholding and even delist the shares of defaulting companies. Now, the new rules, which have been in the works for some time, will come into force with effect from compliance periods ending on or after the 30th of September 2018. All right, that's all you need to know going to trade this Friday morning. Up next is Indian Open, and that will take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.